Hey guys, welcome back to another video. It's been 1 month to be exact. Uh, Let me just show you what I've been working on. So, as you may know, I was working on a game called Tankit. This is what all my previous videos were working on. You can see right here. And when I run it, loads up. Do I want to run the server? Yes. Enter my username. And then I wait for players. Um, okay, 1 second. Let me edit configurations and fix this. Let me just show you what it did. So, let me just allow multiple instances. Let's run it. Run the server, enter my username. Just put in Loraxio. Generates a random map. Do I want a server? No. This will be Ted, I guess. Press OK, and you can see I joined. And now you can see there's a grid, and I can place the walls, and then I can blow it up with a bomb. When I place the bomb on the ground, nothing happens. But yeah, that's basically how this works. And then I can ride around, and you can see it's multiplayer. So one of these clients would be on another computer, right? Oh, shoot. Right, so, okay, I need to fix that wall thing. I just remembered that I forgot to fix that. But when you kill the other guy, it does that. But the problem with this game, you can see it says deprecated on here, is because this was my first time really making a multiplayer game, so the code was extremely messy. So what I did was I restarted the project. Same name, it's called Tankit. This time, I put in the port number. Do I want to host a server? Yes. Enter a username. Right. Put in Loraxio. Now I'm gonna pause the recording because it shows my IP. But okay, so I'm just hiding my IP address right now. That's why this is all the way to the side. But you can see it says waiting for players. Loraxio. This tells you how many players there are. So an actual waiting room, other than it just saying waiting for players. So now I'm gonna put in port number. And then I'm going to say, do I want to host the server? No. And then it's going to ask me for the address, so I'm going to pause it and I'm going to type it in. Then it's going to ask for my username once again. I'll put in Ted. And I'm going to pause it once again because it's going to show my address. It shows it on the side of here. That way, like, the other person can see it and he can join via his computer. Okay, so as you can see, it now changed to say start. Right, now I do want to show you what the other client sees. So I'm just going to pause the video once again and show you. I just don't want to reveal my IP address, so yeah. Okay, so what this says is waiting for host to start. You can't see the waiting, of course, because I've got it to the side trying to block my IP address. And it also shows the players, so let me just bring up my... Oh, shoot. Let me just bring up my other client and start the game. Alright, so I'm gonna start the game. And now it should be safe. Yep, now you can't see my address. But you can see this is what it looks like. So I can place down walls, so same thing, but now if I hold a wall over a slot that's already has a wall there, it'll actually highlight it red saying you can't place it. I'm clicking right now and I can't place it, right? Same thing with this client. And you can see up here it's saying how many players are ready. So let's say the left client, he places stuff, right? Just places walls, and it randomizes walls and bombs. And in future updates, you'll be able to switch. And then you use the bomb to, let's say, blow up a wall. Just like that. Or, let's say, You don't want to blow up a wall, and instead, oh, and also you cannot place stuff in the corners in which the players spawn. But if you don't want to use the bomb to blow up a wall, you can also create a pothole by placing it on the ground, and it creates a pothole, right? And now we are ready. So I am just, what is going on? Oh, my bad. I've got the client switched. So on the left side is blue. So you can see I can move around and everything. Everything's working smoothly. I can shoot. And the walls prevent you from running into it, and it also blocks shots. But the potholes you can shoot over, but you cannot run into, as you can see, right? So let's just go over here, and I can shoot, right? If I kill the other person, it blows up, and then we're back in the building phase, right? And just place stuff, blow stuff up, create potholes, or blow up some of the walls, right? Can do that. One of the things that the potholes allow is, first of all, it was inspired by the Tanky game, or Me Tank, We Play Tank game on the Wii. You can see I can shoot over the potholes, and when it hits the player, they die. There's a few bugs. I'm not sure why there was an explosion over here, but who knows? But yeah, that's it. That's basically the beta completely finished. Yeah, I can explode this, and then I can like shoot over this. Of course, there's a buffer on the shots, otherwise, I wouldn't. Yeah. Okay, so it just crashed, which is odd. That has never happened before. But anyways, I just want to show you what I made. Okay, concurrent modification exception. So I'm not going to work on this right now, but I want to show you the other thing I've been working on. Yes, I know. Please don't judge. But my friends and I are very into investing. So I've been dedicating a tranche of my time to investing and learn. But it's less about actually investing. I don't want to do it as a job. I want to actually do something meaningful. But I don't want to be broke. And I also want to have a handle on my financials. So I already started investing early on Robinhood. Now, before you make judgments about the Robinhood thing, first of all, I am actually being responsible. I'm not like the freaking like millennials who just they just like go with the hype and just they invest in GameStop, Nvidia, whatever they think is cool. One of the key differences that I always make sure to make is that a good product does not mean a good business. It does not mean their stock is going to go up. There's a lot more to it than that. But what I do, what I started with, why don't I show you what I started with? So I started with this Google Slides, and it's stocks notes. I have a dictionary for a couple of terms. I stopped adding definitions to this, and I stopped working on this altogether. But this is all of the beginner stuff that I learned. So year over year, that's year over year, YOY, quarters, 3-month period, or 1/4 of a year. Shares, partial ownerships, all that stuff. Dividends, dividend yield, fractional shares, ETFs, IPO, bullish, bearish, strike price. That's some of the that's this stuff over here that has to do with options, and I do not trade options. I know a lot of people say, oh, you can get rich with options. No, I'm not going to do that. There's EPS, earnings per share, DCF, discount cash flow, all that good stuff. Liquidity. Now, Then I have a couple of notes. I stopped writing these. It says tech company notes, long-term, short-term, like some more like advanced definitions. Like dividends. Compound interest, this is the main one. This is what I use when I look at dividend stocks, like White Horse Finance, that pay like 10%, which is crazy. And it's like quarterly compounding. Anyways, so then I have an investment checklist. Now, I've actually learned something since I started investing. So, before you make judgments about these investments, take a look at what it says here. Now, these are my ratings on my decisions on what to invest in. So, like, this is me looking back in hindsight and saying, all right, was this actually a good investment? Dropbox, it was meh. So, no, I would not make that investment today. This was just absolutely stupid. This was meh. I wouldn't invest in Lucid today. I would not invest in. Okay, this should be meh. I would not invest in Activision. This one, it's smart. The reason why I'm a little skeptical about Berkshire, I do have BRKB, but one share of BRKB, but I don't know what's gonna happen when Warren Buffett dies. That's gonna be really sad, but I don't know what's gonna happen to the company, so I'm not gonna invest in that. Rivian, no. New Holdings. That one is I really liked their product. I really liked their business model because they don't have to actually open physical locations because they're a fully online bank. The only thing is that they are based in Brazil, which is not as stable as being based in the U.S. Not to say like Brazil is worse than the U.S., but just what just U.S. is more stable, right? But it's the only speculative stock that I actually think is worth investing in and that I would actually invest in today. But even then, I wouldn't invest that much money in it, just, because it's a speculative asset. And Petco, I would not invest in today, so I'm going to put here meh. And Bank of America, that I actually really like. I really like their investment. This investment. It's just got a really, really stable business model, and it's cheap. And their PE ratios check out. The numbers look good. And I just see it as like one of those stocks that you would buy for retirement. ETF, IYW, I would not. This should be a meh. Because IYW tracks like the top tech companies. And I was looking at some of the PE ratios. So right here, you can see technology, it's at 31. Their PE ratio is at 31. That's like double what is considered a healthy PE ratio, which is not good. Same thing with real estate, way too high. And recently, the yield curve just inverted, and that usually predicts a recession. Now, if Biden handles this correctly, I really like Biden's presidency. I think a lot of people blame him for stupid stuff that isn't his fault. But anyways, he's handling it pretty well so far. But the market is super overvalued because what happened was under Trump's presidency, they lowered federal interest rates so much that it kept speeding up the economy, which on paper makes it seem like the economy is growing really quickly, which on paper is good, but in reality it was just compounding more debt and more debt and more debt, and eventually it's going to crash, and it's going to crash. It's starting to crash, right? Because in reality, that good economy, that was just all hype. It was fake. It's what happened during the dot-com bubble. It's what happened during the housing crisis of '08. So, yeah, so PE ratio, high PE ratio for technology sector. It's the highest out of this entire list of sectors, which is not good. So, yeah, IYW's meh. I have some fractional shares in Nvidia. My friend told me to buy it. This is beef. This was one of my first investments. I just put it was a stupid investment. They have one of the highest PE ratios in the entire technology industry, and it is completely stupid and very, 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 very overvalued. Unity, I don't know why I put in $1 for some reason. But yeah, NVIDIA, stupid investment. So planned investments, I am not using this anymore. You can see I have some notes on some of these stocks. I worked quite a bit on this ETFs, but now let me show you what I actually use. So I've got a couple of tabs here, but the only one I really use is this long-term investments spread. And this I just use to compare all the numbers quickly. So you can see SCHG, this is a dividend ETF, and this tracks the stable but the highest paying dividend stocks that are stable, right? So that means that the stock will grow, unlike many dividend stocks, but it still has a decent dividend yield, which is around 3.11% each. It has a 30-day yield, which is pretty good actually. I might revisit this. I don't plan on investing in it, simply because I'm not crazy about the companies that they have. Like I don't know too much, and I don't like investing in stuff I don't know about. And I don't understand. I know a lot of like, especially millennials. So I'm sorry I keep harping on millennials, but like millennials have a really, really, really bad handle on their financials. And they blame the '08 crash for that. But yes, it is fair to blame some of it on that. But at some point, like at some point, it when it gets so bad, like it starts to being your fault. And I've got plenty of examples of people I actually know who are millennials who just make horrible financial choices that could be completely avoided. But yeah, anyways, what I'm saying is they like to invest. They like the get rich quick schemes, and that usually involves investing in things that they don't really understand, and I don't buy into that stuff. Like I actually try to invest like Warren Buffett. I'm not saying I'm as good as him, obviously, but I try to follow his guidelines. So, for example, diversification is stupid. Like you said, it's a protection against ignorance. What I do is I look for companies that I understand, like Micron Technologies. I'll get to that in a second, but the reason I really like this ETF, but I'm not going to invest in it because I don't understand the most of these companies. I know IBM, that's like one of the only ones, but like I don't know how Pfizer works. I don't know how Merck works. I don't know how Coca-Cola works. I don't even drink soda, so nor do I drink Pepsi soda. Yeah, so I'm just not gonna invest in this because I don't understand it. Now I have my SPY holdings. This spread is just used for me to gauge. I just wanted to lay this out just to gauge if the SPY, if the S&P 500 would crash. And I just put down all of their PE ratios. You can see this is the dot-com bubble. The dot-com bubble was a crash, put lots of companies bankrupt, and it crashed at a PE ratio of 43. Then you can see all of these other companies and their PE ratios. Tesla's is no longer at 171. It is, in fact, at 206. That's a shit ton of hype, if you ask me. 206, I believe. Let me check. And they want to do a stock split, which is even more. 222? Are you kidding me? Oops. 222 or 221.67. That is insane. Oops. 221.67. That is absolutely bonkers. Alright, so then I made this a while ago, so this isn't updated. So this is now at 69.44. And I believe some of these have gone down, which is good. Oh, no, I thought Amazon went down. It's at 50.49. Microsoft, MSFT, just going by the ticker symbol, is at 32. Okay, that's not good. 0.92. See, there's a lot of hype right now, which is not good because I anticipated a crash, and it seems like I'm going to be right now that the yield curve has inverted just because there's so much hype. Then we have Google. So I'm tracking both Class C and Class A for some reason. They have different PE ratios, which is odd. 24.998. Facebook I know has crashed, but I think it's going back up. So this one has 16.33. JPM, or JP Morgan Chase and companies. I love JP Morgan Chase. This one has a normal PE ratio, 8.81, which is really good. I'm not sure why the entire banking industry has crashed. That's kind of odd in my opinion. They went from around 160 all the way to 140, which is crazy. It went down 14%. That means if I invest in it now and it goes back to its original, I'll have made 30% on my return. And my dad works for JP Morgan Chase and companies, so yeah, I might invest in that. But actually, well, not yet. I'm gonna wait a year to make any investments. I'll explain that in a second. And then of course Berkshire Hathaway, my favorite. 8.88. 8.88. Alright, so these are the current SPY holdings. Top SPY holdings. And this is where the market crashed in 08 or in 01. The dot-com bubble burst when the average PE ratio was at 43.3. Tesla's at 221. Nvidia's at 69. This is really bad. Right now, a fourth of the companies are overvalued, and the rest are approaching it, or most are approaching it, which is not good. And I say approaching because last time I checked, their PE ratios were lower than this, which means their PE ratios are growing, which is not good, right? So I'm gonna circle back to why this is important. By the way, this is what I've been working on. This is why I'm explaining it now. This is company stocks. I don't use this anymore. Oh, these are the holdings that I have. No, not that I have. I don't have BMW. I'm not sure what this is. ETFs. These are some ETFs I was looking at. This is the actual spread I'm using. You can see right here it says recession. I'll explain that in a second. So, let me just highlight this yellow because I am looking at JP Morgan once again. JP Morgan Chase. Anyways, so you can see here I have the stocks and their ticker symbols, and then over here I have the type. So this type represents two things. First, it represents what type of stock it is. Is it a company stock or an exchange trade fund stock? You can see down here I have the exchange trade fund stocks, and then to the right of it I have colon, and then I have a couple of terms. So here I have swing growth. So I just put like what kind of growth do I expect it to make. So this is potential growth. That's Bank of America. JP Morgan is swing growth. Micron Technologies is growth. That's MU. Berkshire is just growth. I'm not going to invest in that, so let me just highlight that red. And Qualcomm, swing growth, yeah. And then you can see I have a couple of compound interests. I have some dividend stocks. Yeah, and then I have the returns. This is for the ETFs only. The, annual returns. Then I have the growth that they've had in the past 1 year and the past 5 years. Then I have their dividend yields, their PE ratios. Anything with a high PE ratio, I automatically eliminate and put in red. So red means I am not going to invest in it. Orange means I'm watching it. Yellow means I'm thinking about investing in it. And green means I am going to invest in it, or I have plans to invest in it. Now, right here it says planned positions. Normally, there would be a number here, but it says TBD because I believe there will be a recession. Let me explain that in a second. So, P ratios, expense ratios is for ETFs only, and then planned positions, obviously. Okay. Why does it say recession? I believe there will be a recession. I was predicting it even before the yield curve inverted, which happened, I believe, just 1 day ago. Every time the yield curve of the 5 to 30 U.S. Treasury bonds inverts, which means when it goes to negative numbers, there has always been a recession. Why did this happen? Well, I was looking at the numbers and I realized, and someone caught my eye, it said federal interest rates had been so low for so long. I looked at when it stayed so low. This happened during Trump's presidency. They lowered it so much that the economy kept growing out of control, right? And now Biden is hiking up federal interest rates because he's the responsible parent, slamming the brakes on the car of the economy, on the vehicle of the economy. And Trump was the little baby who was just slamming on the gas pedal, just go, 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 go. And eventually, the car was going to explode. But unfortunately, this went on for way too long because on paper the economy was growing when in reality it wasn't. It was just gathering more debt, everything was hyped up, and there was going to be another crash just like the dot-com bubble. So, I believe that's one sign of a recession. Second sign is the yield curve. It inverted. There's going to be a recession. Two, or three, is what I showed you before. The PE ratio average of industries are so freaking high. The high, what is considered high is 18 or 19 and above. And it crashed at 44. Technology and real estate. Okay, I'm not sure what's happening to this data. It keeps changing. Oh, that's forward PE ratio. Technology, you can see, is really, really high. Real estate is really, really high. In the end, there's a bubble. It might not be as bad as the dot-com crash, but it's definitely gonna be a crash. And then that's what I was showing you before in the SPY holdings. That was the dividend stuff. This is me looking to see if there's going to be a crash. There's going to be a crash. So that is why I have TBD here, because I want to invest in these. I really do, but I'm not going to. Why? Because there will be a crash, and the whole premise of investing is buy low, sell high. And I'm not going to buy high only to have it crash. And even if it does recover, if I put my money in during the crash instead of before the crash, then the stock price will go way up because it's going to recover as long as I pick a good company like Bank of America, Micron Technologies, that stuff. So that's what I've been doing, predicting a stock market crash, and planning my investments, finishing my tank game. Yeah. Have a good day, guys. See ya.